Good morning. Good morning. It is Monday in the market. So it is Monday, November 23rd. We are Thanksgiving week. So typically this is a pretty slow week overall in the markets. We tend to see a lot of people taking vacation, a lot of holidays beginning this week. So generally some muted action. But looking at the futures this morning, we are up slightly. So let me share my screen and we'll get in here and start talking about some interesting options. So, you know, let me take a look at SPY. SPY is up slightly, about 21 points in the futures. QQQ, we like to use the benchmark here. The Qs are up a dollar 40. So, a little bit of passive flows over the weekend. You guys will remember we often talk about how the overnight action tends to dominate the market. So we tend to see a lot of dealer flows overnight where they're hedging anticipated exposure. They're expecting volatility to come in, buying up some of that short call skew that's coming in and going for the rallies overnight. Let's talk about what's actually moving this morning, though. So one of the tickers that came up this morning was the stay-at-home trade again. So Roku. So Roku's up $11.50 this morning. So I want to break down exactly how we can think about playing this morning. So I'm going to propose two possible options for us here. So the first might be to, with stock trading right around 275, looking out to December, some ways to get exposure to the upside. And actually, before I show you that, I want to show sort of the vol chart on Roku. So zeroing in on the last little bit of time here, I've actually got the implied volatility here, relatively low. We've, following the same trend as the market overall. The vol is really starting to come in here. Implied vols trading in the 60-ish range. Well, this historical vol this red line has been quite a bit above that. And we've seen Roku continue to really trend up, all the way from September, let's start at the beginning of September here. It looks like stock was around 160. We're around 260 now. So Roku's really continued to rally. And I think one interesting way to play that, given the implied volatility is lower than the historical volatility here, simply a call spread. So if you want to buy the 275 in December to sell the 285, it's going to cost you pretty wide markets here actually. So that's an 80-cent wide market on the 275 line, and that's a dollar wide market on the 285 wide line. So a $1.80 wide market overall across the spread. Our midpoint here is around 370. If you actually want to trade that right now, you'd have to pay 460. But we suspect we can get somewhere mid-market. We like to look for price execution improvement, somewhere halfway between that spread. So let me actually show you exactly what I'm talking about here. That spread's pretty wide. We have almost 85 cents between what we think it's theoretically worth and what that offer is. So if that's 80-cent wide, I like to go for about halfway in between. So if I were going to submit an order right now for this, between $5 and $3.90, that's $1.10, add 55 cents, probably go for like a 445 type of order right there. So, if you think you pay 445 for this spread, maybe a little less, the idea would be you pay 445 and your max gain is going to be the $10. So this would be if Roku really keeps rallying, if it gains another 10 points. So 10 points on this would be another 3 and so odd percent. So not beyond unreasonable over the course of the next month for a stock to gain 3%. We're going to see our sort of P&L graph look like this. This is our classic call spread where the amount that we lose is this 380. So that's the most you can lose is the amount that you pay. We probably expect to pay a little bit more just because of those width of the markets that I was talking about there. So, maybe that max risk is closer to 400, but our max gain is going to be around 600 if we paid that 400. So a 3% rally in Roku would give us a $600 gain in this stock. So if you think the stay-at-home trade is going to work a little bit longer, if you think that people are going to be using their devices, they use Roku to stream Netflix, you can use Roku to stream Disney Plus. There are all kinds of different ways to use that device, and it makes a great gift. So I think in a lot of ways we could see that rally through the end of the year. Now, let me show you one other way to play Roku if you really believe this is going to rally. So that might be to accept some near-term pain to really leverage that long upside. And so let me show you exactly what I mean by that. So we like to sell the volatility at the sort of fattest part, which is the at the money. So I'm going to sell one of these $18 272 half calls almost exactly at the money. And then I'm going to buy two of the 275s. So this is what we call a 1x2. So this is if you're very bullish on the trade. So if you're very bullish on the trade, you're going to end up paying a lot more. So we were paying around $4 for that last trade. Now we're going to pay almost $16 for this. But our upside is significant. So if you really believe that this kind of has some unlimited potential here, then you're going to want to take advantage of where this could really run. So I'm going to expand this just a little bit more. So you pay this $15.30. We probably pay a little bit more just given the markets, pay $16. So your max loss is going to be in that 1,600 range, which is certainly not nothing. That the $1,600, but if you really see this rally, you start to see this rally past 300, you have that pure call upside here. And so this is an expensive stock, $270 stock, but you really get some of that upside in exchange for accepting a little bit of near-term pain if the stock doesn't necessarily move. So this is distinctly directional and long that volatility. So you're going to pay a little bit of premium for it. But if we really see Roku continue to rally, your upside potential is nearly unlimited as this keeps going. Taking a look back at the overall market, SPY is up 244. This is about where we were settling around noon or 1 p.m. on Friday. So if you remember on Friday afternoon, expiration Friday always gets interesting. There's a lot of gamma action. There's a lot of people hedging in and out of their positions. We slid quite a bit towards the end of the day, starting around 1:30 or 2. We really saw the market start to leak and drop down. We've recouped most of that today. So we're sitting right back here around that 357 range in SPY. And like I said, expect this to be a relatively quiet week, but there's always things to trade. Keep your eyes open and stay tuned for more of the Daily Bread. Check us out at harvestedfinancial.com, where we manage model portfolios and custom strategies for options investors. Thanks so much.